In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We just two local guys with so much to say. So listen to the real estate brought us today.
So number 16, July 2019. Thanks for joining us on the lunch hour. And for everybody joining in live, we do this every month. Legal disclaimer here, we're not giving any legal or financial advice. We're just a couple guys who quit their day jobs investing in real estate. So we like to share it with everybody. Got my buddy Dean here. You guys can reach him at deanawet@gmail.com. But you've kind of done this $20 prize for everybody to win if they comment in your Facebook feed, right?
Right, exactly. So on the next slide, if you click over, we'll see, as we said, yeah, Didi was the last month's winner. So thank you for everybody that watched and put in their comments and shared. Appreciate it. So this shot just shows it's legit and she got it. You can confirm with her if you want to. But yeah, thanks for everyone who's watching. Really appreciate it.
Yeah, so you guys can just simply put I'm here or Yay Dean or something, and that is your entry into this month's $20 Amazon e-gift card.
Yep.
People go crazy over that. So what's happening in the June statistics in the Hawaii real estate?
So yeah, so for June stats, let's go from down up. So as you can see, for single family as well as condos, they were actually consistent in what they did this year in terms of the arrows up and down. But as we've seen in prior months, active listings for both have gone up, and days on market's going up as well as closed sales volume is decreasing. However, the interesting thing is, the median sales prices for single family and condo are still staying the same and actually creeping up. So, basically telling us that the amount of inventory slowly building up isn't enough to be driving prices down. And, the increased inventory is more of, or inventory on hand is more of a leading indicator. So which would make the prices be lagging, and so we would see prices go up or down after we see inventory going up.
So
At
active
this,
listing going up, what does that mean? What do you think is going to happen? Is the sale prices going to go down because more inventory, or?
if theoretically, that's giving the buyers more options to choose from, so more leverage and putting in offers lower than asking and lower than the existing market price or historical market prices that they closed for in the past. So that would make the prices go down, assuming we get enough inventory buildup, right? And again, inventory, real estate is local, so that's just based on Oahu. So you need to make sure you're looking at wherever you're investing. Yeah. So today, I know, Lane, we have a lot of stuff to cover. So I just wanted to talk about an important real estate term, or two actually. One of them, it popped up on one of my emails, was absorption rate. So this is basically the number of homes sold compared to the number of homes available. And we, a lot in the industry, use this to help determine the conditions to see if it's a sellers or buyers market. And it's used by builders and professionals to help determine, if it's time to start building, starting new builds, or to determine how the market is. Yeah. And so the calculation for this is basically the number of homes sold in a given month over the number of homes available for sale. So it's a percentage. Yeah? And so typically sellers market, this benchmark they say is anything greater than 20% absorption rate would be a seller's market. Anything in between 15 and 20% would be a balanced, and anything less than 15% would be a buyer's market. Yeah. So on the next slide, I just wanted to bring up that every area or every jurisdiction or region talks about stats or terms different. So the Honolulu Board of Realtors likes to use months of inventory remaining for a stat statistic that they've been tracking for many years now. So this is kind of like the inverse of the other fraction, and you're talking about
Days on
percentage.
market, right?
Yeah. So now we're saying the number of active listings available, and you divide it by the average monthly pending sales. So it's the inverse actually. So the benchmark that people like to use is that the seller's market, if it's less than 6 months of inventory remaining, then it's a seller's. Anything greater than 6 months is a buyer's market. So if you compare that to the absorption rate, 6 months of inventory in that middle is approximately 16.7% for absorption rate. So you can see the similarities in that those ratios.
I
But
actually
yeah,
think this is like more complicated than how the mainland does it. Like they do days on market, so it's like easy to think like, well, average days on market is 30 days. If my thing is on the market for 45 days, my realtor sucks. I better something.
no, so you're right, but this is just like another stat. So like on the monthly, the Holland Board of Realtors, when they release it monthly, this is not one that's on their main screen or like the one that we talk about mainly, but this is another benchmark that you can use to help determine, sellers or buyers market and that kind of stuff. So to your point, Lane, we do like to talk the other stats primarily, but this one is just another term I wanted to bring up. So what I also want to show you is historically on Oahu, through this last cycle, the months of inventory remaining were highest in 2008, 2009, obviously after subprime, right? And um, so we're way above 6. We're creeping up to the 10, 11% in 2009, 2008. If you go to the next slide, we'll see, I think 2010, it's hovering, starts to go down, 5 and 6 months remaining, and then we see a steady decline over subsequent years, indicating becoming a very strong seller's market again. Should I go back the other way one more time? And these are just showing you it's that the months remaining just kind of stays consistent over the next years, leading us up until current month. If you couple slides down, more time, and one more. So currently for June 2019, we have months of inventory remaining for single family at 3.9 and condos at 3.6. So you can definitely see the uptick in the trend, and obviously making it, giving us the buyers a more opportune time, and less fighting and multiple offer situations, and giving the buyers more inventory to choose from. Yeah,
But we're really in this like equilibrium, right? Like,
it's becoming more of an equilibrium. Yeah, to your point. Yeah, yeah, yeah.
yeah. Why are we even doing these news if it is? Just like,
Doing the what?
no.
What was that?
Why are we even doing this? What are we doing this for again? No. I guess if you guys like this data stuff, you guys can download the slides on reialoha.com. I post the PDF to this stuff, so you guys can geek out on this all you guys want.
But to your question, Lane, that's a good segue. So for the purposes, just for the sake of it, I posted here's Las Vegas, and this is what their days on market looks like historically, or I'm sorry, months of supply and inventory. And just to give you an idea, you can see it's below 4 months for the last 5 years. But the point is, on my next slide, is to your question, like you said, Lane, why are we doing this, right? So maybe it may be applicable for more for like investors who are dealing in multiple states or different areas, because every area might be talking different languages, right? So some areas like Wahoo likes to talk months of inventory remaining. Others will be talking about other stats. So make sure that if you're dealing in these various jurisdictions, that you're talking the same language as your vendor, as your realtor, and whoever that is. And if you don't understand, ask, because they'll help you talk through it. And like, yeah, I mean, real estate is local, so a lot of these statistics are used just to get a general vibe, so that okay, this is a either strong sellers, strong buyers market, or we're in equilibrium. It helps you plan for
Yeah.
setting your list price or putting in the next offer. So all of this adds up, just one factor in the entire process. Yeah.
Yeah. And if you're looking at a different angle to look to invest, I mean, there's always a market, an emerging market out there where it's a buyer's market, or
Right.
you want to get out of sellers markets, for example, sell at those times.
Yep.
So take the time to talk about our sponsor, raloha.com/food, if you guys want to learn about these. But this is something I personally do for my food. I don't cook anything. I don't go to the waste my time going to the grocery mall and spending time in traffic. I just go to the CrossFit gym, pick up 8 of these things, and I eat that the rest of the week. And my life is simple. That's why I run simplepassivecashflow.com. If you guys want to hear more of my mainland investing adventures, you guys can check it out on iTunes, Google Play, YouTube, Stitcher. URL simplepassivecashflow.com, and check out our arialoha.com, which is our Hawaii investing group, which you guys can check us out on our Facebook group and our meetup. And if you guys want to get a free e-version of my book, text ebook to 587-317-6099 as there. So I've got a bunch of stuff, Dean, but feel free to chime in whenever you want. And if you can check out the Q&A icon for me, and I can't really access it on my end. And if you guys have questions, feel free to type it into the Q&A so we can kind of address them as it is pertinent. So here's a little summary of the market of what's been happening in Houston, for example. Just another example of another market that's traditionally oil and gas, which is very volatile and is also kind of political. A lot of people have been asking me this question. This is not really doesn't really have anything to do with real estate, but it's an investing thing that people like to invest in, which is called life settlements, and it's investing in death. So people have life insurance policies, and it's kind of a sad truth that I think only 30% of people actually get the death payout. So people will spend a lot of money over a long period of time to pay the premiums and never get any benefit out of it. And this is how the insurance companies win. By investing in life settlements, you're able to buy someone's policy, give them the money so that they can live out their final remaining days on Earth with that money. And so it just doesn't go to waste and their insurance decays. But yeah, so there's a link in there. You guys can read up more about it. But just something different, right? I mean, I don't expect you to invest in this stuff. I mean, I'm not investing in this, but in the next couple of years, I'd like to. So it's all education process.
Yeah, that's a good point, Lane. Like knowing what alternative investments are out there, because some investor clients are asking me, I'm helping calculate their cash on cash return for their existing real estate investment, and it's like, okay, here you go, it's 4% or something, and they're like, well, is that good? And to your point, not knowing what the alternative investments are out there, you don't know if that's it's hard to have any perspective on that.
Right. But yeah, this one is definitely accredited only investors. A little morbid, of course, but we'd love to talk with you about it at our next RI Aloha meeting, because it definitely makes the party fun. So I used to live in Seattle for a while after I moved up to there to go to school. So I know the Seattle market, and I feel Seattle is a very good indicator of a prime market that is sort of leading the country in terms of expansion, and probably will lead us into the retraction. So what you're starting to see there is a lot of the REITs buying properties out there, and the REITs are the big institutions that a lot of 401k money is in, which you as a mom and pop investor looking for the best risk adjusted return should not be. So a lot of times I'll buy apartments and we will reposition them, get them stabilized, and we'll get bought out by a REIT who is looking more for capital preservation or a low return. We like them because they overpay. So that's what's starting to happen in Seattle based on this article. Here's another chart if you guys are interested, where the housing price index is in comparison to the production wage interest. Ran across this article, sort of a bullish article saying that the the economic expansion will continue. Little discussion on the 10-year Treasury. And here's another one on talking about the Fed cuts. Do you know who Richard Duncan is, Dean? I had him on my podcast
Oh, who's that?
yesterday, but he's supposedly like this like guru guy that everybody respects a lot. I got a chance to talk with him,
Oh,
but
cool.
very he he believes in like credit. As long as we keep like spending more money, we'll be fine. And a lot of interesting viewpoints on like the China trade thing that's going on in the news right now.
Huh.
So if you guys are interested in that, I would check out that podcast. I'll probably release that in the next couple of weeks. But I after hearing him and hearing the other guy who had my podcast a month ago, I'm very bullish on the economy. In fact, right now,
Oh yeah.
I think most people say like, oh, in 8 to 12 years, that's when the next market cycle. But I don't think it's anything to do with that these days.
Oh, instead of looking at historical, it's not gonna be tied into like you said, could be another 9-10 years, doubling what historically the bull markets have done, kind of thing.
Right, right. Like I think the China trade deal, if that goes through, that'll probably power the economy for another couple of years, which it'll probably get Trump reelected, whether you like him or hate him. He's good for the economy.
Interesting.
So we'll leave that at that. So here's
Yeah.
the mortgage bonds, which dictates interest rates. So things have been actually dropping the interest rates. So I'll talk to Dean if you guys want to refinance. I'm sure he knows some guys who do that well. For you other investors, I just signed up for the premium version of this Rent-A-Meter. It's a great web program where you just type in the address and it pulls out a whole bunch of comps for you. It just saves a lot of time than you running around to Facebook or
Yep, that's good.
Craigslist.
I use that also. I have the premium version of that one too.
Man, we should have shared it. Should
My
have
bad.
shared
Sorry.
logins.
Yeah, we could. Yeah, still
Yeah.
could. Yeah.
Anyway, but you guys want more information about it, simplepassivecashflow.com/rent-o-meter. Great resource. If you guys want me to run a free report for you, sign up for my investment club, simplepassivecashflow.com/club. I'll run a free report for you. But I think if I run too many free reports, it flags me because then it knows that I'm like, you're sharing Netflix with too many people, yeah.
Right.
An article I wrote about the cons of private money lending. I'm not a big fan of private money lending at all. I think debt deals are kind of sucker investment deals where people think that they're investing in real estate, but it's a pretty low return of 8 to 12%.
It caps your upside, right?
Yeah, it's a debt deal. So what you're
Yeah.
looking for are equity deals where you have upside.
Yeah.
And the biggest thing with this is you say you do get 12%. Well, it's taxed as ordinary income.
Yep.
I mean, the whole reason we do real estate as point number 3 here is that you get all these if you can do a cost segregation, you get bonus depreciation, or if you just get simple depreciation that offsets the returns.
Yep.
But yeah, hey, if you want to do it, good for you. But if not, come talk to us. We'll teach you a different way.
Yep.
Some Hawaii news. I digged up this article. You know anything about this thing?
No, what is this? I haven't seen it.
It's another development, and then they probably have to do some low income housing because it's so hard to get permits in Hawaii that's the way to grease the squeaky wheel.
Oh, okay. I don't know about this specifically, but that's where you see a lot of the ones popping up in Kakako have that same deal, right? Where they have to offer like middle income. A portion has to be for middle income housing for them to get approved.
Yeah. Yes. So this one is in Eva Beach.
Oh.
So I don't know. I think these are kind of neat. I mean, it's nice to see a little bit of development in Hawaii. It's nothing like in the mainland, which can be a nice thing too.
Yeah, it's a great opportunity because it's kind of easy to qualify, for those for the middle income earners because that rate is set so high that a lot of people it can qualify for those jobs to buy these the ones that are earmarked, yeah, for
Yeah,
viewing.
yeah. I mean, they still do them as a lottery, right?
Yeah, because there are a lot of lottery based on the interest, the amount of interest. The challenge is when you're buying this way, you, you're capped. Your gains might be capped if and when you sell, because that they're giving you this opportunity, and they're also gonna cap you on the upside if and when you sell.
Yeah. Who was it? Your friend who like paid a bum to like go line up to get their name in to purchase the property. You cannot do that anymore. Yeah, they kind of.
Well, you can get like your realtor can stand in line for you. It depends on how they set it up for you. They have everyone. It constantly changes. There's constantly different rules. So they're learning, because before, I think some of the first ones that started popping up, that payback period where you had to pay back your gains, it kind of after I think 5 or 10 years, it sunsetted, and you can, so if you hold on to that property for that long, and you sell after 5 10 years, you get to keep all of the gains. So it was when they first started, these deals were really lucrative if you could qualify, but now they're getting smarter, and they're making it last longer before you have to pay it out, sometimes as long as you own it.
Yeah, I'm not a fan of like those kind of lottery or going in and like putting down money to maybe to get a spot 2 3 years later. I think that's just dead money, not working.
Well, the funny thing, you bring that up, but the guys who did it when earlier on, and you're buying it at the price point, like you said, 3 years before, and there's potential that the place actually appreciates before you actually buy in, and so there's potential for it to gain, you have all these gains before you even move in. So
Yeah,
that's the appealing part in an upward market. Yeah,
yeah, in an upward market, right?
yeah,
But
yeah.
like to use your word of the day, absorption, like
Mhm.
are those if you look at those condos now, are they it seems to me that the absorption isn't really there, that it's kind of fake demand. That yeah, although they have really fancy facades and you go to the shop in Ala Moana and look at the model units, like I don't think people are really buying them, right?
Yeah,
Like
very good application of the term of the day,
yeah,
Lane.
we don't have any sound effects.
But yeah, that's a really good point. Like especially the really high end stuff there, and the challenge too is, like you said, you know, 2 years later, another complex pops up, and people are flocking to the new one that has bigger and better amenities that they wanted with their property 3 years ago, because the new developer learned and said, oh, we're gonna build a better one. So people will flock to that one. And to your point, Lane, there is becoming a slight build up over in that area.
Yeah, yeah. I mean, I think just the regular single family homes is a better way to go personally, but hey.
Yeah.
But yeah, if you guys want to hang out with us, you guys go to RA Aloha, check out our meeting, the meeting tab. But we've been going to Pi in the
Yeah.
evenings. You gotta pay $3 for parking. So if you can't afford that, you probably shouldn't come. Um, we do the Breakfast Club for out-of-state investors. We do this segment every month, and check out the food options. And let me check if we any other things that kind of popped up in your real estate travelings this past month on your end.
Um, Nothing much. I mean, like I said, like I always bring up, that real estate is local, and so even though we talk about the monthly stats, it's going to be different, right? Because the client in Hawaii Kai that I'm helping buy and sell is different from my investor that's buying in on the west side, which is different from my client that's looking in Manoa to buy for their future. It's so every market is going to be different, and real estate is definitely local. So when you are zooming in on that potential neighborhood that you're gonna move to, um, the stats that we talk about at the beginning of every month is not to say out the door, but now you're gonna drill in closer, yeah. And like the more, like you said, Lane, in terms of education and learning about these alternative investments, whether it be the stock market or residential real estate, commercial, whatnot, it's good to have an idea when you're learning, like what kind of returns you're expecting or what you can expect, because then that gives you more perspective when it comes to, okay, this is what I'm getting now is my return, whether it be cash on cash or comprehensive with tax benefits and appreciation. But it gives more education will help you make better decisions in terms of what other alternatives I have for to put my investments.
Yeah. So we got one question that came up here. And if you guys got any more questions before we sign off today, we're kind of at the end of the lunch time. But I think this one's a question for you, Dean. So more of a Hawaii one.
Okay.
So there are a bunch of high-priced Kailua properties that went for sale after the recent vacation rental legislation passed. That would increase the inventory and average sales price whenever they close. Do you have any thoughts on how that affected the local housing market?
So
my first question is like, was it a drop in a bucket? How many of these properties went out? I mean, I know Hawaii's small, but
so the whole challenge of this is all the whole Airbnb thing and the legislation, and actually the realtors, we have an educational conference tomorrow to talk about all these changes in legislation. But yeah, in Kailua, Lanikai, there's a, my understanding is it's very lucrative in terms of doing these short-term rentals, and but that's all dependent on what the laws are stating. So when we have a volatility in this legislation that causes a big stir, right? So people who previously had the 3-unit or the house with 2 additional units, maybe two of them being not um, permitted, or maybe they are permitted, but when you're doing these short-term rentals in these areas that are in high demand, you have pretty awesome cash flow. I was talking to one investor that was making some pretty nice money at his place in Lanikai. So, but again, when this legislation is in not to say up for grabs, but constantly changing, then it gives your business model, puts a lot of risk on your current business model. So I think that's why we're seeing this happen. Hopefully tomorrow I'll get more insight on it. But yeah, ping me and I would love to chat more about it. But that's, at one time I was looking at the vacation rentals as a potential way to increase my cash on cash returns on Oahu, because it's hard to get cash flowing properties here. So
yeah,
but
time calls for shady business.
Right. I mean, then again, they always say you want to go where everyone is not going, right? So maybe you want to fight it out, or not fight it out per se, but just ride it out and see how it goes. And
I think that if you're gonna follow that, I think a lot of unsophisticated investors are doing short-term rentals. That's why I'm out. Right? Everybody has a house that's not 100% utilized. Every bedroom is being used, and a lot of dumb money has empty houses or empty condos that live somewhere else. I mean, those are the people you're competing with, and if you're looking to make it a business, that's unsophisticated competition.
Like you said, the low hanging fruit, right? So
yeah, I mean, so I got to thinking about it, and I think I wrote this article on it. I'm displaying on the screen now. I'm actually very passionate about the cons of doing these short-term rentals. Apparently, back in April 28, 2019, I wrote this.
Oh, wow.
But yeah, you guys can check that out, raialoha.com/str. And on our RA Aloha page, for the next month, I have, I'm creating a short-term rental focus group dedicated to short-term rentals. So other
that's
investors
interesting.
doing it.
Contrary to how you feel.
Yeah, I'm like kind of gave up. I'm like, I'm tired of just guiding people to what I think. Look, you guys want to do short-term rentals, well, hey, here's other people you can connect
All right.
with.
That's nice. That's good. I mean, because I think you and I are both about sustainability, right? And I think, we're not looking for the next MLM idea. We're looking for something long-term.
Yeah. And it's like, the guy complains, oh, they shut down my short-term rental. I'm like, yeah, man, you didn't think that was gonna happen.
Mm.
That's why, like, I think you and I both invest like blue collar workforce housing in strong, stable markets.
Yep.
Simple.
Yep.
Simple.
Yep.
All right, guys. Well, remember to comment in Dean's Facebook page to get a chance to win that $20. Because it's real. It actually does send it out. It's real.
Ask Didi.
Yeah. All right, and we'll see you guys next time.
Thanks. See ya.
Bye.
Bye.
Free real estate investing group. Check out reialoha.com.
We're just two local guys with so much to say. So listen to the real estate brothers today.